Welcome to the Jay Martin Show. If you are new to the channel, my name is Jay. I'm a retail investor looking for the smartest home for my cash, probably just like you. If that's just like you, I think you're going to enjoy what we do here. Today is episode 5 in our gold series that we released this month. It is the 5th and final episode of this gold series, where frankly, we're diving into the highest quality exposure that I can find in the gold sector. We kicked it off 4 days ago with Randy Smallwood, and we're wrapping up today, Randy Smallwood of Wheat and Precious Metals. And today we're jumping into the Calibre Mining story with the president and CEO, Darren Hall. Now, as always, I don't give stock tips. This is not investment advice, but I am a shareholder of Calibre. I built my position at essentially today's prices. It's June 19th today for context, and I'm continuing to buy and will continue to buy, honestly, until the market wakes up to the value. And as soon as people start chasing share prices, I'm no longer a buyer. I've already built my position. That's my aim here. You know, I speak about this in the newsletter, is that right now, if you're interested in the precious metals sector, there are companies like Calibre that are on track to produce 250,000 to 275,000 ounces of gold this year, 2023, with a all-in sustaining cost of around $1,200. And most importantly, they've delivered on guidance quarter after quarter after quarter in their past. Now, 250,000 ounces, 2023 sounds good, but obviously it's the trajectory of the company that excites me. And Darren is hyper-focused on increasing production and increasing reserves. And as I said, he has an amazing track record of doing exactly what he says he's going to do, as does his team, by the way. Every mid-tier gold producer and junior miner talks about their world-class team. Darren actually has one, and collectively, his management has delivered over $5 billion of value to shareholders from their previous endeavors. We're going to get into that today. I'm excited to introduce the story. What I love about Darren is that he's just a very focused operator. He's not promoting, he's not beating the drum of what they're gonna do. He just, he shares his guidance and then he executes on that, right? And he's got an amazing track record of doing so. So very enjoyable conversation with Darren Hall, the president and CEO of Calibre Mining, for the 5th and final installment of our gold series here on the Jay Martin Show. If you enjoy what we do, hit subscribe and never miss a future video. Here is Darren Hall. Enjoy.
This is Jay Martin.
All right, here I am with Darren Hall, the president and CEO of Calibre Mining. Darren, thanks so much for making the time, for coming on the show and chatting with me today. I appreciate it.
Jay, appreciate you taking the time, and thanks for all the listeners for joining us today as well.
So I want to jump into the Calibre story, obviously. I want to jump into your background. My viewers and newsletter subscribers are familiar with the story because I've been a shareholder for a while. And, as I said before I hit record, I don't give stock tips. I don't do that. But I'm an investor, and I'm happy to talk about why I built a position in the company. And when we get the opportunity to chat with the CEO, all the better. So I'm excited to get you in front of my crowd and pull the story out of you. But let's start with this. Since it's your first time on my show, could we start with just your high-level overview? What is Calibre Mining? What are you building, Darren? And then I'll pull on some threads from there.
Okay, sure. Jay, again, when this story started, it started with the acquisition of some assets from B2 Gold late 2019. During the summer of 2019, we raised some money in order to be able to partner with B2 Gold in the assets in Nicaragua. And what we saw was an opportunity with some assets which in the B2 Gold portfolio become non-core. And they'd become non-core because from these assets, B2 Gold have been able to grow their business significantly internationally into the Philippines and Africa and been a great success. And they've done it off the back of the cash that came out of Nicaragua. But with that, the assets in Nicaragua became, a little small. Right. So their focus and attention, more importantly, rather than their dollar focus, but the human capital focus went to the shinier objects in their portfolio, which then provided an opportunity for us to come in and partner with B2 and say, look, we can see this opportunity to be able to rebirth these assets because they become 110% of our focus. And so that's what we've done, right, is utilize these assets, which have been enduring assets for decades and decades. I mean, to be able to kind of reinvent them, as it were.
Right. And they're essentially undercapitalized. high potential. That's what inspired you to step in, and worthwhile touching on your background prior to Calibre, because you were at Newmont for 30 years, I believe. And if I understand, your core responsibility there correctly, you were essentially traveling the world, visiting operations, and then optimizing them, right? Finding ways to perform better. With a lot of success, I might add, specifically in Peru, I believe, turning an operation from a 50,000 ounce gold producer to a 1,000,000 ounce gold producer. Is that correct?
Yeah, Jay, and I guess as I'll preface this, is, we talk about the opportunity in Nicaragua as well, and we'll go back through a little of the history, even though I'd rather have someone else talk about what I've done rather than myself, right?
Yeah.
But it's, any asset that I go into, I can always see opportunity to be able to improve upon, as will anyone who follows me into an asset. Anyone that's going to follow me into the role here or anywhere that I've been would have been able to go in and say, hey, look, there's an opportunity to do things differently. I would like to say it's a fresh set of eyes, because, it doesn't matter how long you've been dealing with an asset. The issue is that you're always going to leave money on the table, because there's always going to be things that you don't see. And again, I'll use an analogy. If you've been living in the same condo or a house for a period of time, to you, it's set up exactly the way you want it, right? It's perfect, right? You've got it. You've done all the adjustments. It's pretty good. But someone new comes in and goes, hey, Jay, if we throw up a new coat of paint, replace those wall trimmings or, window coverings, and, replace the doilies on the couch with something else, right? All of a sudden it can add value, because it's like, it's that fresh set of eyes, and it's looking at things a little differently. And that's kind of what the opportunity was in Nicaragua, is that, B2Gold had done a fantastic job at managing these assets and building a good social license. But they've been managed as two separate assets, as Limon in the north and Libertad in the south, rather than looking at them as a single company and then leveraging off the combined resources between the two sets of assets. So that was the value proposition. And I guess is that looking at things that way is what, my experience with Newmont has afforded me to do. As you mentioned, I spent about 30 years with Newmont, and it evolved from being a, young kind of engineer that, had no fear and would go in and take, chances on things, but, I started my career in Australia, spent 3 or 4 years there, then moved to the US, then from the US moved to Indonesia, then to Latin America, then back to Indonesia, then to Australia. And all the while, most of what I was focused on with Newmont, as I kind of with growing levels of responsibility, was either to resolve issues or to look at things and say, okay, how can we optimize? How can we realize the full potential of those assets? You mentioned Peru. I mean, I went to Peru in 1997. At that point, it was about a 50, 60,000 ounce a year producer. I left in 2003, and it was producing around 2 million ounces a year. Right. And it had grown from a fairly small and humble contract mining asset to an asset that was, moving, 1 million tons a day of material. Right. So, again, by the grace of God, or, it had been given a deposit that allowed it to do that. But, it's looking at those opportunities and seeing, what can be. I mean, my final position with Newmont was basically managing its assets in what we call the Australia Pacific region, which at that time was Indonesia, Australia, and New Zealand. A fleet of about 14,000 people, and represented about 40% of Newmont's EBITDA at that point in time. Again, from relatively humble beginnings, things have grown, and you get lots of experience through it, and seeing lots of different assets, not just seeing, but actually experiencing them, living there, understanding how they work has, given me a good background, which, I very much appreciate my time at Newmont from what it provided me, is the ability now to be able to go in and do the things that I do now. And, I left Newmont in 2015, was taking a little bit of time off, and got a call to say, hey, would you like to come and join Newmarket Gold? And it's just like, well, who are Newmarket, right? So I didn't know who they were, did a little bit of research. I was kind of holding the phone up to my ear and looking at the computer, and there was some great founders in there with Blaine Johnson and Doug Forster, but it had some industry backers in there with, Lucas Lundin, Pierre Lassonde, Ian Telfer were involved in the assets as well. So he looked at this and said, oh, there's something about this. So I got involved, and we just finalising the process of purchasing the Crocodile Gold assets in Australia, which a part of that was Fosterville, which then 18 months later, we've ended into Kirkland Lake Gold for around $1 billion, right? And I think the asset price was about 50 million on the purchase. Again, but the opportunity there was taking a group of like-minded individuals who wanted to create shareholder value and put in place the right team in order to be able to realize the full potential of the assets. And my responsibility in that was to be able to manage the assets in Australia and provide that ability from a capital markets perspective to be able to capture the value.
I'm glad you mentioned the team in that context, because a lot of mid-tier producers, a lot of junior miners talk about their world-class management team, but you've actually got one, right? When you look at the track record of your board directors, your executives, you mentioned Blaine Johnson, you mentioned Doug Forrester, Doug Hurst, another who's been on my show, Ryan King. Obviously, this is the team that put the puck in the net with Newmarket, and now success begets success. We try to follow those trajectories. This is the team that's now working on Calibre. In addition, just go ahead, please.
No, absolutely, Jay. And again, it's and what's critical in this, and I don't want to sound too cliche, but to get a really quality team, a high-performing team, it's not necessarily high-performing individuals. It's that combination that allows. And what it is that it's a group of people that, one, you choose to work with. And everyone that's here as part of Calibre is here because they want to be, not because they've got nowhere else to go, not because they're wedded because of financial commitments. It's not golden handcuffs that they've built over time, and all of a sudden they've got these options and RSUs and PSUs and things that they've generated over 15 or 20 years. They've all elected to be here, and we're working with a group of people that we want to work with, that we trust, that are all very good at what they do and play position. And then we coordinate between the positions really well. And I think we've put together a good management team over the last couple of years as well. There's been some changes. And I think, one of the keys is we've got a good mix of people who have come from, I'll call it the small end of town and also the large end of town. And one of the things that people who've worked in the larger mining space can provide is that they understand how process can actually be accretive to the business. So if bureaucracy is typically a four-letter word, which people kind of shy away from, but having a bureaucracy, if you will, or process that works for you rather than you working for it, allows for repeatable outcomes and is very accretive to good business as well. So what you find is a lot of people who have just primarily come out of the small scale space don't understand the value in having good process to be able to support. Now, the trick is, as you come out of the larger space into the smaller space, it's getting it fit for scale, right? You don't want to try and impact or impose on the organization process that becomes debilitating to the organization. That's why I use the euphemism that it's working for you rather than you working for it. Yeah. So I think we've got a good group of people, and we've created an environment that allows people to contribute to their full potential based on their skill sets, because we provide an environment that is conducive to that. And I'm not the sharpest knife in the drawer, so I like to use lots of analogies, and one of them that you could probably talk to most of the people in the organization, and we've got around 3,000 people in our organization today, but is this one. And maybe this will be useful, Jay, when you get into the discussion on the video, maybe not, but it's I'll hold this up and I'll say, what am I holding up here, Jay? And you go, well, it's a cell phone. Right? Well, it's a cell phone because it is. But if we consider this analogous for a problem, what your angle of this is this piece here. If I turn it 90 degrees, it looks differently. If I turn it 180 degrees, it looks differently. So if we can create an environment which allows all people to be able to have their say and contribute on the analysis, we'll end up with an optimal decision. We'll end up with the inputs for an optimal decision. We still need someone to make the decision, but creating that environment that allows people to with the diversity of opinions, diversity of backgrounds, to be able to contribute, we'll end up with a very good solution. And that's the culture we're trying to create. And I think we've been somewhat successful at Calibre, and we'll continue to nurture. And we don't want to lose, particularly as we grow, is the ability to be able to solicit that, right?
Right.
Is that get those different perspectives, have the debate, decide, and then execute. And that's the value in the diversity piece.
I love that. I love that. And, I mean, it, has to come from managing 15,000 people at Newmont. It's, lacking process would equal chaos in about 30 minutes.
No, and you get the process, which is great, but you've also got to create the environment which allows people to contribute. So, a lot of people spend a lot of time talking about corporate cultures, and there's lots of wallpaper up there about values and, and mission and vision. What we've done is we've defined a series of behaviors within the organization that we expect all employees to be able to demonstrate, and for management to be able to demonstrate, in addition to what everyone needs to do, so that we can get that environment where it allows people to contribute and that we can realize the full potential of our assets. Are we perfect? Hell no, right? But, we're unrelenting in working out where our inadequacies are so that we can continue to improve, and hopefully that results in, adding shareholder value.
I love that. Well, let's jump into the projects a little bit, and maybe we'll stick with Nicaragua for the time being, which is the bulk of your production. Obviously, I want to cover Nevada, which I would kind of see as a parallel acquisition, right? You acquired some undercapitalized assets, injected a bunch of capital into them to squeeze out the value, and I want to talk about that as well. But maybe give us the overview of the operation in Nicaragua, production, and anything you want to get in front of my audience right now, Darren.
Yeah, sure. And it's probably worthwhile just spend a minute and just kind of go through the history. We've had these assets now for just on 3 years, just over 3 years. And, when we acquired the assets, there was two assets in the portfolio, Limon in the north and Libertad in the south. Libertad was a large mill that B2Gold had built in 2009 through 11. And done a fantastic job at operating that asset, but it had been foreshadowed to go into closure in 2020. When we purchased the assets during the due diligence process, the opportunity that we realized is that we have an asset at Limon, which only has 500,000 ton a year of capacity in terms of mill capacity. Its mining capacity, its resource base was significantly larger. So it was constrained by the ability to be able to process ore. A few hours down the road at Libertad, we had a mill that was significantly larger. It's four times as large as the mill at Limon, and it was being idled out because there was no water processor. Well, to me, I walk in and go, well, this seems pretty obvious to me, is let's take some material from Limon and Libertad. And they're like, the guys in country going, yeah, that's a really good idea. And it's just like, okay, well, what do we need to do to make it happen? We took control of the assets in October of 2019, middle of October. And we commenced first ore deliveries as a trial in December, right? And all of a sudden, we saw a change in mindset through the organization, because it was like they were now connecting how this asset and this asset together would be greater than the sum of the parts, right? And then that started to breed, hold on, we can do this. We can move people between, we can leverage off, because we're breaking down the barriers that existed between basically two companies. Right. And coming in and saying, I'm agnostic as to whether it's part of Triton or Desmonic, which are the two ownership companies, is what I see as an opportunity here to be able to leverage off the resource capacity that exists in Nicaragua. And we have mills, one north, one south. Let's see how we can create value. So debottlenecking Limon allowed for proof of concept to be able to take the material from Limon to Libertad. In doing that, it then allowed us to be able to develop Pavon, which was about 300 kilometers away from Libertad, too small to be able to warrant building its own mill and tailings dam and all the associated infrastructure. But to develop an open pit mine, it was kind of a no-brainer, and then move that material to Libertad. So that happened commenced in 2020, and in 2021 we started bringing material from Pavon to Libertad, and all of a sudden people are going, hold on, this all makes sense.
Right.
Then in 2022, we went through the process of permitting some material in the Atlantic region, which is about 400 kilometers away from the Libertad mill, which were part of the legacy assets that Calibre brought as a junior exploration company, again, as they stood too small to be able to generate their own mine and to be able to warrant the investment of a new mill and tailings facility and everything that goes. We just pull that material into Libertad. So we're leveraging off the infrastructure. So to be able to accretively add production, we can do it for very, very low cost, capital cost, because the bulk of the capital money is already spent. It's the relatively small levels of capital that are required to establish a surface mine or an underground mine.
Right.
So, so what we've gone from is, two independent facilities and mines now to something which is we've proven or demonstrated the ability that anything in Nicaragua is within hauling distance of one of our facilities. So we've changed the landscape from, two mines to basically the entire landscape of Nicaragua as our playing field, which then is a great position for B, because now as we've got a significant land position, and now we're in a position where we have afforded the right to be able to now go out and look at more generative exploration. Our focus from an exploration perspective over the last couple of years has been confidence and conversion, and that's being able to build a reasonable base of reserve that allows us to be able to demonstrate we can keep track in front of the train. So, from humble beginnings at the end of 2019, we've grown reserves 370% after producing nearly 600,000 ounces in this 3-year period, right? And the majority of that came from conversion of what was resources or relatively well-known material into reserve. So now we can start to say, okay, well, what are the next kind of train stops along the track, if you will, further out? So now we're starting in 2023 to look further afield from an exploration perspective to say, where are the next mining spokes that we can now deliver material to the Libertad or Limon mills?
Yes.
So, I think it's a pretty exciting time is that, we look at the last 3 years, we've gone from a relatively humble position of around $4 million net of obligations at the end of 2019 to roughly $60 million in cash today, after growing reserves 370%, after developing new mines, to be able to say, okay, we're now on the inflection point of now looking at what are all those other opportunities that exist in Nicaragua. And all the while, we've still got 1 million tons of surplus capacity available to us at Libertad.
Yeah.
And putting that in perspective, that's about 1 million tons is 2 times the capacity at Limon. So Limon is roughly a 60 to 70,000 ounce a year producer. So you look at the opportunity for organic growth, it's arguably 140, 150,000 ounces if we were to utilize that installed capacity at Libertad. So, from a cash flow generation perspective, I think we're on the cusp of some great things in Nicaragua.
I love that. Yeah. And thank you for walking through the hub and spoke model to make sure, we get that in front of my audience. And then I just have to ask, when navigating in Nicaragua, some people might have questions about how you've been able to execute down there. I know I think I would think back to your boots on the ground experience with Newmont, how boots on the ground you guys are in Nicaragua. I think like 95% of your employees are from Nicaragua, Nicaraguan.
Yep.
And I know you're hyper involved in sustainability initiatives down there. Recently put out a documentary sort of describing that, which is pretty cool, and I recommend people check out. But any thoughts, anything you'd want to share on just generally operating in a country that some would point to as being volatile?
Yeah, no, and I think that the difference here, Jay, is the perspective of looking into the fishbowl versus being in the fishbowl. And let's talk about being in the fishbowl and operating in Nicaragua. Every country, every jurisdiction you operate in has its idiosyncrasies, right? But Nicaragua is a fantastic place to operate. It has a great legal framework from a resource industry perspective. It has a community of people who are welcoming to mining, right? The communities in which we operate, providing you do the right things, are supportive of, because there is a rich mining history in the country. Generally speaking, it's a very poor country. So The foreign investment creates jobs, which people obviously, value significantly, as does the government. So, from that perspective, I found Nicaragua a really, really great place to operate. There's a lack of talent on the mining and resource industry's kind of higher end skills in terms of the technical talents, because there hasn't been that much industrial mining, right? B2Gold predominantly been the sole reason, or the sole kind of industrial miner, if you will, over the last decade. So we find that we have to attract some talent in from other Latin American countries to be able to provide support to the Nicaraguans to be able to develop. But in terms of the willingness to, the people are sponges. They absorb it. They want to develop. They're proud. They stand behind our product. I mean, no, they're great people to deal with. And from a personal perspective, it's I'd argue it's the safest country in Latin America. If you look at some of what you see in some of the what we call mining friendly jurisdictions like Ecuador and Peru and other places, we see increasing levels of personal risk and security issues. Right? We see quite the contrary in Nicaragua. As evidence, you go to a lot of these developing countries, and you'll see that the security forces are armed, right? Over the last 18 months, we've removed all weapons from our properties, right? We've gone the other way. There are no guns on any of our guards, except that they're required by federal legislation, and that typically being around explosives magazines, there has to be a level of, which is mandated by law. But in terms of general population, they don't exist. So on our properties, so you don't see that personal risk. It's actually, and interestingly enough too, Jay, is that it's one of the very few jurisdictions in the world where yet I have not been hit up for a bribe.
Interesting.
Right? And even though that there are discussions about corruption in Nicaragua, I think what we find is that because of us being an international company and what we bring to Nicaragua, I think that people kind of respect that boundary and understand that what we bring is a level of legitimacy to being able to operate in that jurisdiction, which people value. So we typically don't get caught up in that. We don't get caught up in, hey, if you want to get something out of customs, you need to pay for this. We don't see that.
Yeah.
Right. So it's very refreshing from that perspective.
Okay. And I appreciate the inside versus outside of the fishbowl analogy. My brother lived in Nicaragua for a couple of years, and I went down to visit him a couple of times. It is a beautiful country. So let's pivot up to Nevada. Your second jurisdiction, acquired some assets from Fiore Gold. Like I said, I kind of saw it as a similar transaction in that you identified some undercapitalized assets, acquired them, injected some capital in order to squeeze out the value. Would you describe it that way, or how would you discuss your Nevada assets, Darren?
No, I think that's fair, Joe. I think you've summarized it really well. And again, I'll probably dumb it down even a little further, if you will. It's kind of like, Fiore had a very good sense of fiscal responsibility. And what I mean by that is that they were willing to invest in the assets, but they didn't want to dilute nor borrow to be able to do it. So basically their approach was that if we could afford it at a cash flow, then we would invest.
Okay.
Now, given the nature of the asset, which is pan, they've done a fantastic job at birthing the asset and being able to generate a level of cash flow from an asset that's a 0.4 gram, 2-to-1 strip ratio heap leach, right? So they obviously were very careful about the way they spent money, and were very good about what they did. But within that land position in Nevada, which we see as significantly potential, they couldn't generate the cash that was required in order to be able to determine what that full potential could be from an exploration perspective. So it's kind of like the situation where you generate enough surplus to be able to, well, I'll step back. You have 3 children, you can relate to that.
I do.
But unfortunately, right, you only have enough money to be able to feed one of them. Which child are you going to feed? Well, that's kind of a little bit of the Fiore situation, right? Is that, they weren't going to borrow to feed the children. So they picked a child and they progressed Gold Rock, which was a great property to develop and continue to progress. However, within the land position that was there in and around Pan and Illapa, and other land positions that weren't investing in those assets, even though every year they kind of replaced depletion, but they had a very modest exploration potential. So you can never really put enough track in front of the train to be able to determine, hey, what could this look like? What could the scale look like? What's the opportunity to be able to grow production and thereby, reduce and amortize some of your fixed costs over a larger number of ounces and lower your unit cost to increase cash flow, right? They didn't have that ability to because they couldn't afford to. So that was the opportunity that was presented, right? So undercapitalized assets, but it was because, again, their fiscal regime, they didn't want to dilute and they didn't want to borrow, which was great. And that's what presented us with the opportunity. And that's what, we see Nevada as. It's a great entry point into a tier 1 jurisdiction. It allows us to look at opportunities for inorganic and organic growth in Nevada, but specifically, our focus right now is to look at what's the potential on the land package that we see there in Nevada.
Okay, yeah, and extend the mine life, make new discoveries. Yeah,
absolutely. And we saw that again. We've only had the assets for just on a year, and after depletion, we increased reserves 23% at the end of 2022. Right. So again, a fairly credible outcome there for, a series of owners that have had the assets for, at that point, was, 10 months. So
yeah.
No, I think we're very encouraged about what we see. And what we see from recent drilling is we see good opportunity to be able to expand the resource base near surface oxide and some potential for some deeper sulfide material as well. And we'll, over the next 12 to 18 months, it'll be great to be able to share those exploration results with yourself and the listeners as well. But I'm encouraged by and hopefully the next month or so we'll have some interesting news results coming out as well.
Yeah. Okay. Well, the drill programs have been pretty extensive, so there's lots to look forward to. So to kind of like close the loop on this, we're looking at 2023 guidance of somewhere around 250 to 270,000 ounces.
Yep.
With an all-in sustaining costs around 1,200, like I believe it's around there.
Yep.
The significant part about that, when you look at the Calibre story, and one of the key reasons I really like it right now is the valuation relative to your peers puts you at a significant discount. The market hasn't seemed to wake up to the value. However, the institutions have. Your analyst coverage is very, very strong from Raymond James, BMO, Canaccord Genuity, Scotia possibly, but tons of analyst coverage, strong buy ratings. So the retail investor, me, looks at the company story, looks at the growth potential, looks at the track record of the management, looks at the valuation, and then I'm like, this is perfect. This is perfect for me. You may not love the share price, but I do right now, Darren. I do. And then you look at the support of the institutions and the analyst coverage just to add some conviction to your thesis. I want to leave my audience with what we can expect. So, I'm a retail investor. I have the same question as many of my viewers, which is, okay, great. What's going to happen next? So in terms of near-term news flow, we talked about the drilling programs. Maybe we go there, but what's next in terms of what we can expect to hear via the press release over the next few months, say like 3 to 6 month time horizon, Darren? What's front and center?
Yeah, no, Jay, and I guess there's one thing I'd highlight though is that we've seen very good share performance over the last 5 months, and if we looked at how we've performed year to date, I don't have the numbers quite on the top of my head, but the last time I looked, we're in that 70% return year to date. If we looked at the GDXJ, it was around 10%, so we're leading the pack in the GDXJ. We'd seen great share price appreciation year to date. But again, to your point, I think we're still undervalued with respect to our peers. Now, everybody says that, but I think, again, pick your metric and look at it, but I'm pretty sure that we are. And what we're doing is we're doing a bit of catch up. And I think that what we're seeing is that people had been a bit of a Missouri on this, if you will, in terms of wait and see, show me, right? And I think that we saw an inflection point here at the end of last year, where after 3 years, people are going, hold on, we kind of see what's coming out of this Calibre story now, right? If you look at where it was, where it is, what we've been able to do, and we've been able to deliver into guidance quarter on quarter, every quarter, and not disappoint. we're building that level of credibility. We're growing production, we're building cash, we're growing reserves, all of the things that people want to see. So if we think about the catalysts that you're likely to see over the next couple of quarters, it's more of the same, right? Is reinforcing confidence in the product, because with that, then people will understand and appreciate the value that can be drawn from Calibre. Again, we've got growing production this year as we bring in the additional mining spokes in Nicaragua. So we'll see production increase quarter on quarter. We'll see costs kind of come off a little bit, will come down a little bit, right? As we see an increased level of production, which again amortizes the fixed cost piece over a little bit, right? The grade-driven production growth. From that, you'll see a significant cash build as we go into Q3 and Q4, right? I would like to see us in a position, well in excess of $100 million at current metal prices by the end of the year in terms of treasury after all the investment. Which is, again, just extrapolating from the guidance we've already provided. So I'm not disclosing anything that's not public. People can do the math, right? Yep. So I think when people actually, really start to understand, particularly the retail space, the value that's going to come from Calibre over the next 6 months, I think that, again, people will pretty quickly fall in behind the story. Again, it's delivery, not disappointing, and it's continued to interact and keep people informed of where we're headed. And so, again, Q2 production, we're bearing down on the end of Q2. As it stands today, there'll be no negative surprises when we come out with when we pre-release production here in July. We've got nothing negative happening from a cost perspective. We've got no overruns on capital spend because we're not building big projects, right? It's growth capital to be able to support the grade-driven growth. It's not building mills and doing those sorts of things is where we see a lot of capital destruction.
Yeah.
And you leverage that off some interesting exploration results and some resource growth. I think that again, that's where the catalysts will be over the next 6 months. More of the same, which will just reinforce and continue, hopefully, that trajectory that we've seen about outstripping the GDXJ and some of our peers, and get us back to a point where we're more fairly valued with respect to that peer group.
I love that. And you spoke to the scale of your projects and the cash build plans. You are self-funded, no debt on Calibre's balance sheet. Worth bringing that up as well. Look, Darren, I want to thank you for chatting with me today. It's been fun, digging into the story with you and getting to know, where your focus lies and just generally introducing you to my audience. So I appreciate your time today.
No, Jay, I very much appreciate your support and all your listeners' support as well. And happy at any point. I mean, I love talking about the product, and it's a good story. And like I say, it's all about us being able to deliver into our guidance, not disappoint. And we believe if we continue to do the right things and we continue to ensure, regardless of where gold price is headed, that we can be sustainable and cash flow positive at any foreseeable gold price, then we'll continue to return value to our shareholders.
I love that, and I'm looking forward to continuing this discussion live on stage at the VRIC in the winter. So lots to look forward to. But I want to get you back on the show between now and then, anyways, just to get an update. And I look forward to that.
Be perfect. Thanks very much, Jane. Appreciate it. And all the best to you and your family.
Thank you for tuning in. I hope you enjoyed this conversation. Now, if you want to take the next step, I publish a weekly newsletter and it's free. There's a link to subscribe right beneath this video, and you can join me and 50,000 other investors weekly for this exclusive content where I share my key action items and takeaways from conversations just like this and plenty others. Thanks for stopping by.